Hello, hello, hello. Okay, we are jumping in for PPI. PPI news was at 8:30. And that's where we got this little spike here. Taking out the daily high on Wednesday the 25th of Feb. So we'll see what happens now. If that was a manipulation to run lower, or if this is unsettled business and we need to reach back up here once more. I'm sort of favoring that to happen. We've only barely wicked above this previous daily high, and it was with that news candle. So not only do we have probably more stops resting above here because it's a daily high, but also our news high as well. There's something I need to do is actually log into my account. Let me flip back to this quickly while I log into my account. Actually, don't know if it's working right now. I'm trying to log into Tradeovate. Sort of having an issue, it seems. I think it's working again now. Okay, we've just hit the open as well. And here we go. I'm logged in. Oh, my screen stuffed up again. There we go. Okay, so we have run up towards this buy side level first, as we were kind of thinking would happen at the open. All right, so almost about to take this high here. We'll label this our news high. This sort of spike lower just before the open sort of seems like that could have been our tiny manipulation to then purge this level. But leading into today, we've had a bullish run ever since the week opened. We've had a bullish run for Tuesday so far during London session and overnight session. So a lot of people are going to have that bullish bias, right? And for good reasons. We've been bullish for this whole week so far, after having that massive gap down at the weekly open. But if you can frame a setup which is opposite to that of which majority of people are thinking, so in this case, if we can frame a bearish setup here, that is something good to go for, and I'll try my best to try and enter a trade in that direction because we're fading the majority of people and their sentiment. I do like the internal sell side level I marked out here, and then also the equal lows, which were from Asia and London session. But you've got two different types of sentiment here. You've got the ICT traders, which see equal lows, and that becomes a clear target for them. And then you've got your trend traders and retail logic who just see us running higher, and we'll look for today to be a continuation of that bullish price action. So we might be able to get a first look of a trade today towards that 950 macro as we always sort of look for. Cool, we're just about to take the next visible daily high, which I'm actually gonna draw this out a bit nicer here. When was that, the 4th of Feb? It was. Okay, so we just had price. That's our nearest daily high we have. The next one is another 500 points away, so we're not going to mark that out as a key level to look for. I'll note down here, if we do retrace lower before reaching the equal lows, we do have this hourly fair value gap here. So I'm going to keep that marked out. This could be quite interesting in terms of the fact that the price action to the left of the chart is so much further left, you know, a couple of months ago in early February. That's kind of hard to dictate in the near term where price is likely heading. And honestly, until we start moving to the downside a little bit and creating a little bit of more structure in this current range, there's not a whole lot that I'm actually going to be able to use to trade. I need some sort of key levels on a higher time frame, which I suppose I could scroll on the hourly chart all the way to the left and see what we can look at, but the contract's from a while ago, so that's when it starts getting a bit choppy. It might be better to actually look on a continuous chart and to the left, which I have open on a different screen. Yeah, we're getting a bit of downward move now. 939, I'm going to be waiting to around 950 to sort of look for an entry. Wait for this initial chop pass. So this is sort of going to be our initial displacement fair value gap as well. Here. This is for Tuesday. What kind of regular trading hours gap did we have this for today? I didn't even check. I'm actually going to draw this out now. Actually, I can do this better just by opening the RTH chart. So these are going to be nice downward targets as well. Okay. So some kind of a run back down into that regular trading hours gap would be nice. It overlaps, the midpoint overlaps with that hourly fair value gap that we've marked out here on the 30-minute chart. And you can see the body, we haven't gone below the body of that of today's 9:30 open yet either. So it's just been all bullish price action since 9:30 open. We could be seeing some breakout traders, sorry, entering the market right now. Definitely not something I'd be trying to long, so it's going to be interesting if something holds or if we just keep wicking above the highs here. This offers no real meaningful displacement if we're not closing candle bodies one above the other. Am I bearish today? I'm kind of neutral today, but I'd likely only be taking bearish trades today. Yeah, it's not as simple as if I'm bullish or bearish on today. It's more so that I see clean targets for the downside. You know, we've got some internal sell side liquidity. We have our regular trading hours gap and some equal lows as well. All good candidates for downward targets. But we have been bullish on the long term. Definitely over the last few weeks. So it's whether we continue that for this New York session or not. But I don't really have enough structure to be able to take a long trade at the moment. I need us to come back down, sweep some more stops before then running higher if I was to go long, which is why bearish setups sort of seem like the easier play for me at the moment. Yeah, after 10 a.m. After 10 a.m. is sort of when I'm going to look for well, the 950 macro is sort of what I trade. So 950 to 1010, that's when I'll be looking to sort of start entering a trade if I do. So mainly I trade either like a silver bullet model, or I trade my own model as well, which is sort of a trading blueprint, which I have made a video on my YouTube channel. You just see it titled the 1-to-1 trading blueprint. It's a combination of a lot of things, sort of reaching high time frame PD raise, having a change in state of delivery within a macro, and then entering with a 1-to-1 risk reward. But I do read price just as general order flow as well. So I base a lot of my entries on if other traders are trapped in their positions or not. Because you'll often find that if you can frame a trade idea and at the same time you have other people who are also trapped in their trades in the opposite direction, that fuels your trade a lot more than if you're just trading patterns, which a lot of your silver bullet and fractal models can sort of become if you're not watching what's actually happening in front of you in price action. Like right now, we've been bullish straight from the open. You've probably had people try to catch a breakout above these little swing highs that we're putting in here. Your ICT traders are seeing this first presented fair value gap as now an inversion fair value gap. So you might get, at the moment, a lot of people going long here right now, for example, and putting their stop below this most recent 3-bar low. So for me, and my ideology I'm working with right now is that I'm not going to be chasing this bullish price. So if I'm framing a short trade at the moment, I've got a condition here where people are probably long in this inversion fair value gap right now. So if they're going to be stuck in their positions, I don't want to see price reach back above this high. And if we sort of chop around in here for a bit and then show any willingness to then go lower, I can try and frame a trade idea to take a short against this, targeting where they would have their stops, which would probably be roughly here, even a bit shorter, just to make those partials, those profit taking secure. And then if I was holding more than one contract, I'd hold runners down towards my sell side targets, which are the regular trading hours opening range gap, and then our key liquidity levels as well. Yeah, exactly. And that's why shorts in something like this works, as long as you're not trying to hold for the complete reversal. Because you can plan for a reversal to happen, but it could only be a retracement. So if you're targeting a short and just taking some of that move as being the retracement and taking a partial, that's a win at the end of the day. And that's all you need. I think we also have some SMT right now as well. I'm not sure if that's something you use. It's something I use a little bit. Nah, nothing meaningful anyway. At the moment, it's just being patient. Being patient and waiting to see what's going to happen. See, this is when people who are long are going to start panicking, because this is probably their initial target to at least move their stop to break even or take a partial. We've gotten super close. Panic starts to set in, price starts to turn against you. People have probably already moved their stops to break even now. So if you've been in long at the high of this inversion fair value gap, you might have had your stop below the inversion fair value gap targeting here. Panic move your stop to break even, and you'll likely probably get stopped out any second. And then if price wants to really pressure those who haven't moved their stop to break even, we might start to target down here towards the 939 low. And I mean, it's easy to sort of tell that, because how would you feel if you were in this long right now, using this as an inversion fair value gap? You know? And look at that. Running quickly against those who were, in a sense, trying to catch a continuation of this bullish price action that we've had. So, it looks like we're about to form two bearish fair value gaps in a row. Now, this is kind of a good sign, because it means that bearish displacement could start pushing us down towards our first kind of level for a retracement here. Like, if you're only taking this little range that we've put in, optimal trade entry here, just below this sort of sell side level here, is the 50% of this range that we've just put in. So if price is retracing, you can typically expect a retracement to at least 50% of a range, and that's just below level of sell side. So if you are looking for a short, targeting something like this would be a very nice bread and butter setup. Yeah, I'll execute live if I'm in for a trade. When I last live streamed, I think it was last Thursday, I took 2 or 3 live wins. not super rushed to jump into the short yet. If I was to go short, say this. If price was to reach up here, that would have been a decent short. You could have had a 20-point stop. Targeting here, it's almost a 1 to 2 risk reward. But if I was looking to go short now, I don't know, I'd either have to wait for us to jump back below this inversion fair value gap. But I don't think that's something I'd be trading on, because even looking at this, I was wanting to target this little 3-bar low here, this little swing low. I'd want to be entering above this 50% level. So for me, a trade that could have been viable was to use this as an entry to go short. Even if I didn't put it in a longer, larger stop loss, that's almost a 1-to-1 there. Which could be doable. I'm just going to test it out. I think I could still see, it's tough in this position. I could still easily see us running back above these highs one more time. But I'm only trading micros at the moment, and 2 micros, you know, that's nothing. Especially if you're using a stop, which is, would be a 1-to-1, 28. So a 1-to-1 is like there, right? I'm actually going to take 1 there, because the idea would be that once we reach below this minor sell side level, is that we would have another contract to play with to keep as a runner, ideally. But we'll see. There's still a basis that for people who were long have already been trapped and stopped out of this move that they were in. So seeing price run back up one more time, sweeping people who are early short like myself, that's also viable. But you got to pick a direction and a bias for the session. And for me, that's shorts, especially with how we opened from 9:30. So then the goal is to just time your entry to not be someone who is swept out prior to the real move happening. Market maker buy model is there in 15 minutes. I'm not sure what you mean by that. Do you mean we just completed a market maker buy model? So we're getting close. I'm actually move my first partial just to the low of the bodies here. Use the bodies as ideally the pool of liquidity, most of where the liquidity would be resting. This is actually almost a position where it would be likely. Ideally, moving my stop to break even now could be the play, since we did move almost 20 points away. But we could still simply, I'm sort of just thinking out loud here, because we could easily come back up, get stopped for break even, chop around a bit, and then go lower. It's kind of a tough position. But then because we have this small Sibby now on the 5 minute, so ideally this run above here is for us to tap into this 5 minute fair value gap, bearish fair value gap, and then immediately run lower. If not, our idea could be wrong, and we might just be stuck in this trade for a bit while longer until price decides if it wants to run up to the buy side or down below first. Now we have some big SMT here between NQ and ES. ES has already swept this buy side here and is running higher while NQ is lacking a fair bit, so it'd be ideal if now or shortly ES decides to flip along with NQ. Very close to being stopped out here. Okay, looks like the bulls are going to win this one. Okay. So I stopped out in that one. Wait to see if we get another opportunity for an entry here. Again, if we just run above this high here. And keep going, there's still nothing that would give me some good framework to enter on along. So I'm still looking for shorts here. But if nothing clean presents itself, then I'm not going to worry about it for the session and just come back again tomorrow. In hindsight, if you're using purely ICT concepts and looking at this inversion fair value gap being first presented fair value gap, you could say that the close of the candle bodies here were respecting the low of that inversion fair value gap. So as soon as we started displacing higher, entries either at the high of this inversion fair value gap or somewhere else on a lower time frame could have been a good idea to then run along. Four-hour SMT with YM. Yeah, nice. Let me know if you go long, man. I'd be interested to see. Can probably label this fair value gap here as well as an inversion fair value gap. This was actually a small SMT here as well that I only just noticed. Not something I'd usually consider when it's this small between these 1 minute candle lows. But yeah, if you were someone who went long here, either using this inversion fair value gap, the first presented fair value gap, after the bodies respected the low and then we went higher, that would have been a great entry. Or even this inversion fair value gap as well for longs. But after missing those two initial entries, you can't really afford to chase it up here. If price was to come back sort of into these fair value gaps here, you can't use this as an area to go long, because you'd have to have a tightish stop loss, which could be easily violated when you're in a premium of a range here. But actually something to notice here is that ES is filling a new day opening gap. An old new day opening gap between the 26th of Feb to the 27th of Feb. And we've almost reached the high of that now. Almost. Now we're getting to a good time here now. We're getting towards the end of the first hour for regular trading hours. So if you look at the time between 10:20 and 10:40, that is your macro window for the first hour of regular hours trading. Of regular trading hours, sorry. Right. Now, I'm honestly not going to be sticking around for too much longer, depending on what we start doing here. If nothing else sort of shows or provides the opportunity for an entry soon, then I'll probably call it for the morning, I think. We have an old new week opening gap here. I'll just mark out on the daily chart. So we're just hitting the lower quadrant of this old new week opening gap. How many weeks ago was it? I might be able to bring it up in my settings here. Actually, it was a lot longer than that, I think. Yeah, there. There we go. So you can see this old new week opening gap here. Now with this grey box. Let's turn off that, that, and that. So the low of this new week opening gap overlaps with... Oh, actually, let me turn that off. Overlaps with this fair value gap here on the 1 minute chart. So actually, that would have made that a viable fair value gap to go long, because usually if you're looking for a fair value gap for an entry and you have something which overlaps with a higher time frame PD array and key level, like the low of this new week opening gap, when you match that with your bias and direction of price, that becomes a key fair value gap to watch to enter on a trade. Almost don't mind the idea of a short scalp here. Now, I'll tell you what, I'm doing this in a second. It might not work. It's definitely not something I would typically trade. Oops. And if this doesn't work, I'm gonna call it for the day. Okay, perfect, perfect timing for my entry there. Let me just get this bullish candle. So the fact that we were reaching towards the end of this first hour of regular trading hours, and we're overlapping with, well, we're reaching up into this lower quadrant of a new week, old new week opening gap. What I like to see is related to the power of three. So from the 9:30 open, we've just been running up higher and higher, and we're about to get to 10:30, which would be the end of that first hour. And if we're forming the hourly candle, we want to see an open, a low, an open high, low close. So waiting to end the hour, I want to see us retrace into this new hour. And our retracement would ideally be back into this range a little bit. But in this case, if you were to do that and enter like I did here, which is just one micro, it's fine. It was just to see if the idea would work. You then have nowhere safe to put your stop loss. You don't know how, if price doesn't run immediately lower with my idea here, you don't know where to put your stop. Which is why if I'm playing around with ideologies like this, I just do like a simple 20-point stop or something like that and just trade with a micro. Because a lot of the time it can pay off when you're just looking for these small retracements at key levels, but framing it around the power of 3. But yeah, today is also seemingly just going to be a very bullish day, no matter about the sentiment. It could just be a slow grind up for the entire day, as it has been kind of for the morning since London. It is interesting that we're starting to, at the beginning of this new hourly open, we had this displacement higher with this fair value gap, which in my mind is signaling for people to go long again. So maybe here is now where it would have been more ideal to scalp with one micro contract for a retracement short. Have something like this, 20 points, 20 points there. That could have been an ideal scalp, because you also have the added confluence that this little displacement fair value gap higher is enticing other people to go long. Do we retrace all the way down to where I've got my buy limit currently? I honestly don't think so. And I might have to reconsider where I'm gonna, or what I'm gonna do with this position that I'm in right now. It still wouldn't, it's still well above 50% of this range that we're dealing with. But if we're just continually bullish right now, I doubt we retrace to here. And if bulls win again, you just got to think that it's probably not the best idea to fade a big trend like we're in right now. Consecutive bullish days, bullish overall sentiment, fading that bullish sentiment when it's so large from what's happening around the world is quite difficult, and you've seen that there. 2 small losses, just micro, so it's fine. That's why I was willing to do it. But that's gonna be me for today. Thanks for everyone who came by. I'm gonna go live again tomorrow, so we'll see if we can catch any nice trades then. But until next time, cheers guys, I'm out.